ATT Business Tax and Accounting Principles, May 2014 paper, question 4. My name is Omar Aswat. Selling Limited has been trading for many years from a leased property. In June 2020, it purchased a property which it moved into in December 2020 after significant improvements costing around £700,000 had been completed. This work included installation of a new cold water system, as well as installation of movable shelving units. Briefly explain by reference only to the above two items. So we have the new cold water system, movable shelving units. What capital allowances might be claimed, and that is for 3 marks. We have 2 items, 3 marks. We need to go into a bit more detail. And looking at the new cold water system first, it will qualify as integral features, and therefore writing down allowances at 6%. So integral features go into the special rate pool. Other examples of integral features are electrical systems, cold water systems, which we have here. So electrical systems, heating systems, AC, air conditioning, lifts, escalators, moving walkways, and external solar shading. And this is all found in the Capital Allowances Act 2001, section 33A. So you can check that out. As we say, where an item is classified as an integral feature to a building, the associated expenditure qualifies for plant and machinery allowances, however, allocated to the special rate pool, which therefore receives writing down allowances at 6%. The second item, the movable shelving units, that will qualify for plant and machinery as normal and writing down allowances at 18%, so that would be in the main pool. And because it's a movable item, movable shelving units, this would fall in list C, and that is section 23 of the Capital Allowances Act 2001 as well, section 23. Now we need to go a bit more further. So we can go on to say that annual investment allowance of 1 million is available and should be offset against integral features in priority to plant and machinery. Why? Because integral features receive only 6% writing down. You'd rather write off 18% per annum. So therefore, prioritize annual investment expenditure, annual investment allowance against integral features expenditure. 3 marks, you'd get a mark there, a mark there. So effectively you're listing out what it qualifies for and then the writing down allowance. And then you'd get half a mark for saying the annual investment allowance is available and half a mark using the word priority. AIA should be offset against integral features in the special rate pool in priority to plant and machinery, 3 marks.